Good morning, Tim Sykes here. Happy July 4th holiday weekend. Remember, the markets close early today on July 3rd, 1 p.m. Eastern, and tomorrow closed entirely. I want you to go out, have fun, celebrate with your friends and family, but also study. Tim Bohen is actually giving a free webinar tomorrow. He's been on fire. It's pretty amazing how good he's gotten, not just at nailing these big winners early, but also teaching them. And he's giving a free webinar tomorrow, July 4th, 10 a.m. Eastern. I'll post a link. I think that you should tune in. I'm also getting a ton of questions about this new Business Insider article where I talk about the 6 key signals that I use before trading. And I know they made it premium. I got to make a whole video about it. I'll do that in the next day or so. Sorry, it's been a crazy weekend. I wish that they would just keep the articles free, but Insider tends to do this. Right now, I really want to talk about, this one with DHC. This is my over the weekend trade. Really educational. I don't think necessarily it's going to be a huge profit, but I think that it will be very educational. And I've said this from pretty much the beginning of 2023. I don't think this is the best year to earn a lot. I think this is the best year to learn a lot. And DHC is a great example because it really started spiking here. March 2nd was the big spike here. Then it downtrended for a while. Then we had another uptrend here in June. Really nice, really impressive uptrend. And it's all based on, some very interesting indicators. It's not your typical uptrend. It's not your typical spiker. So I'm in at 220, just a few thousand shares. Pre-market, it's 225, already got up to 235. We'll see how far it can go, but I like my odds. And let me just explain, going back to the beginning, why did it first start spiking? This was March 1st. They announced, quarterly results. And the results were actually, pretty good. It's, significant year-over-year improvement. And just for some background, this is way down off of its highs. So it's a potential turnaround play. And this is what, it was very exciting to see an earnings winner. But earnings winners also, again, this is very 2023 where it spikes for a few days, then comes right back down, actually got even lower than when they reported good earnings. So you can't get too comfortable with any of these plays. You can't say, oh, the turnaround is definitely in play. It did spike for like 3 or 4 days or even 5 days after earnings, but a few months later, nothing. So this was the good earnings on March 1st. This is what started the spike. This is what was interesting. So they announced a merger with this other company on April 11th. And you can see here, this was right here. This is what started the real big downtrend because wait a minute, this company was supposedly going to turn around here and now they're doing a merger for basically like cents on the dollar and the market didn't like it. You can see here the merger was announced here at the 120s. It was already down like 30-40% after a few weeks, big volume. Before that, it looked like a turnaround play. But that's not the end of the story. This is what's so interesting. There's ups and downs, twists and turns. This is on April 12th, and basically they're talking about like a nightmare deal, saying like this is very, it's not valuing DHC very highly. This is on May 23rd. And so now there's an opposition, right? So let me just put this in perspective. Good earnings, bad merger, and then this on May 23rd, this is the opposition to the deal. And if you look here, this is May 23rd. So you have good news, bad news, good news. And then May 23rd, when there's an opposition to the deal, this really started spiking it even more because now it's like, wait a minute, let's not do the merger. Maybe the business is turning around. Then on June 8th, the holders actually file some paperwork opposing the deal. So, they start to oppose it here on May 23rd, but June 8th, which is right here, this is the big spike. Sorry about that. Someone was at the door. Like I said, I have a crazy schedule, but I really wanted to get this video out because again, no matter what this stock does, it's really actually pretty interesting and educational. Remember, good earnings, bad merger, they start to oppose it right here. They actually file paperwork to oppose it right here. And everyone's all excited, but then it starts coming down. And, it comes right back down to this key level. The former high here was 2-ish, and it comes back down to the 180s because now it's like, wait a minute, is this merger going to go through or not? There's a few more articles. I won't bore you, but now it looks like this. Hold on. Too many people are contacting me. Now it looks like, this opposition will fail, so the stock drops. And what was interesting last week, which is what made me buy it on Friday, this news came out really saying like, wait a minute, look at this. They announced that they're going to default for insufficient collateral value. And they're working with lenders to obtain a waiver. And so some people might say like, this is very strange here. Because wait a minute, they're supposedly rebounding business-wise. They're supposedly going to do this merger. Now they're supposedly defaulting. How is this good news? This is why I want to make this video, because the stock market is not as simple as you want it to be. Some people say like, oh, a company reports good earnings, it should spike. Oh, bad earnings, it should drop. It's not like that 1-to-1 ratio. And why this stock spiked on Friday where they might default is because if they do default, guess what? That makes them more unlikely to do the merger because the other company doesn't want to, get in bed with this company that's now defaulting. So it's spiking on the hope that the merger will fail. Even though this press release, this is what's so funny, they're negotiating a waiver, they're trying to do it more, and, they're basically saying like, this is why the board of trustees has unanimously recommended that shareholders vote in favor of the pending merger. So it's like this battle where the trustees and like everyone involved, they're kind of like checked out mentally. But shareholders say, wait a minute, we don't really want this merger because we're valuing this company for peanuts. So in this press release, this is what's so crazy. This is why I had to do this video. In this press release, the board of trustees says, look, we don't have enough money. Please, we need to vote on this merger. At least we can get some value here. But, at the same time, shareholders don't want that. Shareholders say, no, default, business might be turning around. So I'm not trying to guess what's going to happen, in the long run. Merger arbitrage and guessing games. But I did like the buy on Friday because now the momentum has flipped a little bit where, maybe the merger won't go through. And more importantly for me, it just got above $2 a share key resistance. And it looks like there's like smooth sailing to the mid 2s or the high 2s. We'll see how high it can go or if I'm wrong. It wouldn't surprise me if I'm wrong because this is a very inexact science. But this is what happens with these, near bankrupt companies. It's a battle. What are they worth? Should they merge? Should they try to turn the business around? And the stock reflects it. I just think it's fascinating for a company to put out a bad press release saying, we don't have enough money, please vote for the merger. But the stock spikes because they don't want the merger to go through. And the bad press release actually gives them more hope that the merger won't go through. Like it's crazy. I had to like kind of piece this together, and I'm sorry that I'm getting interrupted while making this video. But anyways, this is the play. I'm not betting on whether the merger will actually go through or not, later on. God. Sorry, I don't know if you can hear that. Literally, like everything is blowing up because of this, Business Insider article. Like everyone's like, well, wait a minute, you're actually real. Surprise, guys. Yes, I trade, I'm real, I teach, I create millionaires. Thank you for your interest. I'm a little overwhelmed. Anyways, DHC, I'm not trying to hold until the merger goes through or doesn't go through. I just like that the momentum has flipped on Friday, and this stock has a really good history of, spiking for 3, 4, 5 days on good news, dropping for, 3, 4, 5 days on bad news, spiking for several days. And again, this is this stock. So I think that it's above the key level of 2. I would love for this to go higher. We'll see. But either way, it's very educational. Any merger can be, approved or blocked. Any company, it can look like they're turning around or not. You don't know. It's all a guessing game. You're just looking for indicators with momentum. So I hope that this video makes a little sense. Again, I'm sorry I'm getting interrupted all over the place. Happy 4th of July. Definitely tune into this free webinar tomorrow by Tim Bohen. I'll post a link. I'll see you in chat. Thank you.